Greetings, Ted Hicks, founder, CEO, and Chief Investment Officer for Hicks & Associates Wealth Management. Today is Wednesday, the 17th of November. Last week, the Bureau of Labor Statistics released their latest data on inflation. Inflation has been something we've been concerned about all year long, and it's been something we've been very proactive about in terms of the money that we're managing on behalf of clients. But given that it's in the news and there's been some new strategies that are being made available this year, we thought we would shoot a video to explain a tracking error, a potential gap in the strategy that you at least need to be aware of. So let's first show you the official report. This is the report from the Bureau of Labor Statistics. It's online if you really want to read the full 38 pages, but I've highlighted the key sentence. Over the last 12 months, the All Items Index increased 6.2% before seasonal adjustment. Many academics would consider 5% to be the line in the sand. Once you cross 5%, we are in a high inflationary environment, according to these academics. So we are there. The question is, will we stay there? Number one, we won't get into that in this video. The second question is, what should we do about it in terms of our investment portfolio? Remember, when we're investing for the future, we want our portfolio to outperform inflation. So if inflation is 6.2%, we arguably need to try to get a rate of return greater than 6.2% in our portfolio. Well, how do you do that? One of the ways that people have sought to outpace inflation in an inflationary environment is to use gold. Gold has been a store of value for centuries. It has been a currency, a form of currency for centuries. So that has been one way that people have addressed it. However, with Bitcoin being on the scene now, many people are starting to wonder, should we be using Bitcoin in our investment portfolio to help us combat inflation? Well, one of the challenges with Bitcoin is, how does the average investor get access to Bitcoin? Okay, so what's happened here recently is there's been several ETFs that have been created to allow the average investor access to Bitcoin. So this is BITO, B-I-T-O. Now, first of all, keep in mind, none of the ETFs that I'm mentioning are recommendations. I'm just trying to explain tracking error so that you're aware, if you're going to use one of these strategies, that you understand the potential gap in that strategy. So BITO is a Bitcoin-based ETF that was released on October 19th. However, you are not invested in Bitcoin when you use this ETF. You're invested in futures that are tied to Bitcoin. And when you do that in an ETF, you frequently get tracking error. Let me explain. On the screen is Brent crude. So this is oil, and I've got it highlighted since about 2006. Now, one of the ways that most people are not going to buy Brent crude, they're going to buy an ETF that gets access to Brent crude. So this is one of the popular ETFs that many people have used over the years to get access to the oil market. Okay, so this is the USO ETF since that same time period. Now, how do the two compare? Let's look at them side by side. The green line is Brent crude. The blue line is the USO ETF, which is supposed to mirror the Brent crude index. And what's happening to the price of Brent crude? So this is the last 5 years. So over the last 5 years, Brent crude is up about 77%, whereas the USO ETF, which is supposed to track the oil market, is actually negative 31% over that 5-year time period. Okay, so why is that the case? Because the ETF, the USO ETF, is using oil futures contracts, and when you're using oil futures contracts, you have to buy new contracts constantly, and so there's also an embedded cost, and over time you can get tracking error, as illustrated with this chart. So I'm not saying that USO is not a good investment strategy. If you want to put oil in your portfolio, USO is a potential solution. You just need to know that there is potentially a tracking error as it relates to the actual oil market. We would say the same thing is a potential problem with using an ETF-based investment that's attached to Bitcoin. So, not saying these are bad strategies, but we might consider them not to be a long-term hold in a portfolio, but perhaps a short-term strategic play. So I hope that helps. If you have any questions, by all means, feel free to reach out to me and my team. We're happy to help. We do have the two offices, one in Cary and one in Southern Pines, North Carolina. Our contact information is on the screen. We hope you found this helpful.